Welcome, everybody, to a new analysis of trigonometrics. My name is Dario, and in this episode, we're going to have a focus on the top Chinese indexes. In particular, for those of you that are not familiar with that, we're going to start with the FTSE Chinese A50 Index. This covers the 50 largest A share companies by market capitalization in China and is heavily followed by global investors and fund managers, especially those investing in China via offshore products. We're going to have a look at the Shanghai Composite Index, in which there are all listed companies of the Shanghai Stock Exchange, A shares and B shares, and it's the primary gauge of the Chinese stock market, tracking the performance of the Chinese largest companies. We're going to have a look at the Shenzhen Composite Index, SZSE, which covers 500 of the largest companies listed on the Shenzhen Stock Exchange and focuses more on technology and innovation driven companies, often representing more dynamic and smaller firms compared to the Shanghai Stock Exchange. We're going to have a look also at CSI 300, in which it covers the top 300 stocks by market capitalization from both the Shanghai and Shenzhen stock exchanges. And this is a very popular benchmark index for tracking the overall performance of the mainland China stocks market. And finally, we're going to have a look at the Hang Seng Index, HSI. So it covers the 50 largest companies listed on the Hong Kong Stock Exchange, including many Chinese companies. While it's a Hong Kong based index, it includes many of China's largest companies, making it a crucial index for assessing China's economy environment from an international perspective. In the episode 19, issued 3 months ago, I was suggesting the possibility that from this top we could have had tangibly the beginning of a T plus 5 upward cycle, and therefore we couldn't go back to this top before at least 3 months because a new T plus 5, so yearly cycle, was in development, and therefore we needed to have a certain number of candles below the top in order to allow its development. And I left intentionally the red arrow here, and I was explaining also the course of the downward cycles, suggesting that we could have expected more downtrend. And actually, the episode was called the Rally Pause because after the first rally here, or after the first impulse to begin a T plus 5 downward cycle from this low on the 18th of January 2024, we could have expected a retracement. And I left intentionally by the end of the video, roughly, also the Fibonacci retracement. And according to that, this low touched this key level um, at 11,121, and which was approximately the 0.786% retracement, so the lowest part of the retracement of the Fibonacci. So analysis correct. I update also the chart in the meantime to give you another flavor regarding the downward cycles here. Especially we have at the beginning of the T plus 2 with the first negative downward cycle here and another downward cycle here. From this low, we have at a T plus 1. This T plus 1 lasted 20 days, and the T plus 2 lasted 39 days. So 39 days close to the maximum duration of a T plus 2 up to 44 days. And the second negative T plus 1 here, 20 days negative because the low in which it ended was lower compared from the low to which it started to 20 bars. And we have had actually another T plus 2 from this low to the candle before the minimum, 31 bars, and even in this case, this T plus 2 has been negative. So let's now clean the chart a bit, and let's make some further analysis, because here the interesting part is going to come. Another little say regarding the downward cycles is the following. So we have had from the 18th of January 2023 until 12th of April 2024, the first T plus 3, which is the 3 months cycle. You can always check according to the legend on the right, 62 bars. The second T plus 3 took place from, of course, the subsequent low until here, which is 81 bars. So we have had a first T plus 3. Of course, we have had sub-cycles, shorter cycle within this second T plus 3, which has been negative, 81 days. And plus, we have had this T plus 2 cycle. Now, the thing is that if we wanted to gauge the total duration of the first T plus 3 and the second T plus 3 until here, we obtain 143 bars. But we have had also another T plus 2. And this T plus 2 took, as we said before, 32 bars. So now if we gauge the total duration from this T plus 5, the beginning, until the minimum low, we have 175 bars. 175 bars is the combination of the first T plus 3, the second T plus 3, and a T plus 2. But 175 bars stands in a 6 months cycle duration, 169 until 189. So this is a T plus 4 hybrid cycle. So the hybrid cycles are basically cycles that happen low, less frequently compared to the standard other cycles like a T plus 4 here, or a T plus 3, or a T plus 2. So in this case, we have had a kind of a unusual duration for the cycle. So here we have a T plus 4H. And with this law here, we have the beginning of potentially another new T plus 4. 175 bars is not the minimum duration to close a T plus 5, because we need 190 bars. So therefore, the cycle is a T plus 4H. And now we can have a new T plus 3, T plus 4. So given that it has just started, we will need to track basically on a regular basis to which extent this cycle will proceed. Now, the most interesting part of this video analysis comes here. This is the beginning of a T plus 5. And if we gauge the total duration from its previous T plus 5 until here, we have 338 bars, which is basically the maximum duration of a T plus 5. So here we have really the tangible assumption that we have a T plus 5. Therefore, here we put a T plus 5 upward cycle. Upward cycles means that we have cycles that are connecting top with tops, whilst downward cycle are cycles that are connecting low with other lows. Okay, so it's basically the other flip of the coin. First T plus 4, second T plus 4 upward cycle, and third T plus 4 upward cycle. So this has been a T plus 5 divided in first 6 months, second 6 month cycle, and third 6 month cycle. Now we know that the duration of a T plus 5 is embedded between 190 and 338 days. But according to the golden rule of the cycle analysis, you can always check the introduction of the cycle analysis in the video on the pop-up banner on the right hand side. Given that this candle occurred on the 26th of September 24, broke up this top, this break occurred after 94 days, so even less than 100 days, 94 days. This means that this T plus 5 now can extend the residual time of its minimum to its maximum duration just on the upside, because this cycle's T plus 5 cycle has turned into a positive one. So the end of the cycle will be, of course, higher compared to this one, and the end of the cycle will extend its rally until its minimum or maximum duration. This means that in terms of time, and this is why such methodology is different compared to the technical analysis, because of course here we broke up a resistance. Of course, here we broke up another resistance, which was basically another area in which the price could have pulled back. Now, if we gauge now the duration, we can expect a rally or a prosecution to the upside regarding the price until at least, and I repeat, at least 190 bars, which means that the index China A50 can proceed the rally until at least Friday, 7 February 2025. Of course, we can have pullbacks in between. And if we want to consider this would be the minimal, or let's say the um essential case scenario. But if we want to consider a medium case scenario, then we can extend the rally until 250, roughly 50 bars, which is a median duration of a T plus 5. Therefore, we can extend the rally until the 8th of May 2025. And in the best case scenario, of course, the more we extend the time until it's lower, or let's say maximum or minimum duration, the less frequent probabilities we have to reach its extension, especially because the first T plus 5 or the previous T plus 5 lasted 338 bars. So it's quite, let's say, quite improbable that we're going to have another 338 bar upward yearly cycle after the first one or the previous one that completed its duration at its maximum duration. But in any case, just as a matter of information, we can extend, in the best case scenario, the rally until 338 bars, excluding Bayer tongue, which could be another extension of the rally, but we can go even beyond the 1st of September 2025 until the 3rd of September 2025. So this is a really valuable information that you can get through this analysis only on this channel. So this turn, the T plus 5 turned into positive. This was our checkpoint, price checkpoint, and here now we can we have forecast the duration to the upside. Now, if we focus more on the short term, here we have the following situation. We have had a first T plus 3 cycle ended with this stop on 19th of August 2024, and the duration of this T plus 3 has been of 65 bars. Now, from this top, we have the possibility to have a new T plus 3 or T plus 4 upward cycle. And of course, if the T plus 5 has turned into a positive one, even this one has turned into a positive one. Um, if we gauge the total duration from this top to this top, now we have 29 bars. 29 bars, it's already encompassed in more than a minimum duration of a monthly cycle. Therefore, we might extend the rally through until 44 bars, but we need to be so until 17th of October, but we need now to be aware and cautious that a potential pullback can be can be can happen. Particularly from this top, we have had weekly upward cycle that has now lasted 7 bars. So here we have already the minimum duration to have a weekly upward cycle, which is 6 bars. So in other words, we can proceed the rally up to 11 bars. So now we have um, basically other uh, four possibilities from Monday onwards to proceed to the upside, and 7 possibilities to start retracing. So after so based on the price of Monday and next week, we can expect then a retracement for either starting a new weekly upward cycle or a T+2, which requires at least 7 days below the top to its development, and subsequently a return back to the upside. If we also gauge the downward cycles, here we have reached 7 days. So also we might expect the first close of a weekly downward cycle for the beginning or basically the next week, and then we have to monitor the price if we'll immediately go back to the extreme tops, or if we will have a development of a T+2 cycle in which we will have in which we can have a consolidation phase, so some bars below an absolute top, but the direction will be definitely a return back to the absolute tops. So the retracement, let's say the retracement phase or the consolidation phase, can be used um, to buy more long positions. Okay, so that's what we can foresee regarding the next week. So be ready for a pullback. It might happen already on Monday or towards the end of the week. This will allow to start a new weekly or T+1 or T+2 upward cycle, and at the same time to close the weekly downward cycle. But in the end of the day, the direction will be towards the absolute tops. So that's the situation we have on the China A50. If you wanna, if you have more comments or questions, feel free to send us a comment in the related area. So let's move to the next. On the Shanghai Composite Index, we don't have the same situation as for the China A50, because if we consider the stop with a T+5 upward cycle that was made on the 20th of May 2024, here with this candle occurred on the Friday 27th of September, we haven't broke up the stop. But we have a situation in which, thanks to this condition happened with this candle on the 25th of Wednesday, 25th of September 2024. We have a T+2 that is now turning into positive. Therefore, if we consider the total duration, which is 19 days, we can have still 5 days at least to proceed the rally. Therefore, here the first target will be at 3,174. So we don't have the same condition at the moment, but we might have a high likelihood to go to this top and go even beyond. We have plenty of time to do it because we have so we are at 91 bars of this T plus 5 and the minimum time is 190 bars. So we will have to monitor the next week if the price will go towards this high or even go beyond. And if this is going to happen, then we will have even on this index a condition in which a T plus 5 is a positive one, and then we could at that point in time, if it happens, of course, we can proceed the rally until 2025 and beyond. Okay, so in this case, in this index, another thing to add is that we have had on Monday, 8th of May 2023, the previous T plus 5 upward cycle that happened, that finished as development after 249 bars. And regarding the downward cycle, here we have had a T plus 5 that was happening on the 27th of April 2022, in which we had a T plus 5 on the 27th of April 2022 that ended its development on the 15th of March 2023. And from the 15th of March 2023, we have had second T plus 4, second T plus 5 downward cycle that lasted 200 220 bars. So you can always check out the durations as for the legend here. So nothing else to add on this index. We expect basically an uptrend with a first target here in focus at 3,174 CNY. Let's move to the next. On the Shenzhen component index, we have pretty much a similar situation as the Shanghai Composite Index, because even in this case, we have had, as for the other one, a nice breakup of the moving average 200 period. This candle went over this candle or this swing, but we haven't reached yet this checkpoint at 9,804. Therefore, here we still have to wait as as for the Shanghai as well, to have eventually this break, to have additional information from the market to proceed to the rally and calculate how many days we can have to extend the rally of the price. But we know at the moment that this T plus 2 has turned into a positive one, and in this case we have 19 bars. So we can have another 5 bars to proceed to the upside or even more. And that's why we have a high likelihood to go over this first checkpoint level. So even in this case, we expect more rally to the upside with this first target, and then the second target will be at 10,122, and eventually the third target will be at 11,305. Regarding the framing of the chart, we have had a T plus 5 downward cycle that started on the 26th of April 2022 and ended on the T plus 4 Bayatong here at 272 bars. And then we had a market anomaly, how we call it, or a Bayatong, which is basically an extension of the cycles of 3 degrees less. So a T plus 4 that is connecting a potential T plus 7 and another T plus 7. And a T plus 7 is a 3 to 5 year macro cycle. And this T plus 4 has had a total duration of 100 163 bars. So if you don't know what the Bayer tongues are, then you can always check Introduction to the TE Cycle Analysis video. Regarding the upward cycles, we have had a T+5 upward cycle generated on the 30th of January 2023 that ended its development on the 8th of May 2024, and you can always check the duration here. In this case, we have at 306 bars. So also in this case, we expect more push toward the upside. You have all the targets at the moment, and let's keep the situation monitored also for next video, and let's see how the situation will gonna look like. Let's move to the next one. On the CSI 300 index, we have pretty much the similar situation as for China A50, in which with Friday's candle occurred on the 27th of September 2024, we went over this swing occurred on the 20th of May 2024 at 3,703 CNY. So therefore, here we have a T+5 upward cycle that has turned into a positive one, and such turning has been occurred after 92 bars. So basically here we have the confirmation from the market that the rally can stay in shape until 190 days, at least up to 338 days. So as we were discussing from China A50 here, we have also for midterm investors the opportunity to grasp some opportunities from this market. So basically, we can forecast the rally to stay in shape until at least is the base case scenario here, 190 bars or 100 days of the opening of the stock exchange. So we until 19th of February 2025. If we want to have, considering a midterm duration, 250 days, so until 14th of May 2025. And if you want to consider the best case scenario, of course, the more we stretch the duration, the less possibilities we have to reach the maximum duration as well for the minimum duration. But still, the best case scenario would be 338 days. So this means that we can stretch the rally until 15th of September 2025. Of course, we're going to have some pullbacks in between. So here on the short-term view, we have added the first T+2 upward cycle after 44 bars. So we had this shape. The second T+2, considering that now we are overstretched, is here as for basically the other indexes. So there is also correlation among those. After 30 bars, we had another T+2, but do we have the condition for a T+3 as well here? We closed the cycle with a 3 degrees less, so 6-7 bars. Yes, so here we have also the condition not just to close a T+2 but also T+3, and then we can expect a new T+3. Let's see how many candles we have been under its minimum 15 bars. So yes, so here we can have not just a T+2 but also a T+3. This means that we have more time to extend the proceed the rally, as this So we have had another T plus 2, T plus 2, closing of a T plus 3, and now another T plus 2 or T plus 3. So, but this doesn't matter too much because here we have a wider cycle T plus 5 already positive. So as said before, we can extend the rally at least up to the first quarter 2025. So here our T cycle analysis suggests that we can rally for a mid-term time. We have added the harshly break of a moving average 200 period, and now the moving average 50 period and moving average 21 are basically turning toward the upside. Uh, Again, here regarding the downward cycle, we have had T plus 5 that was negative, and always gauging the duration, we had 310 bars from 28th of October 2022 until the 1st February 2024. And now with this new downward yearly cycle we are in, we have spent 149 bars for the first T plus 4, and now a new T plus 4 is on the edge. So here what we can say regarding the CSI 300, again, this is the main forecast. Here we have had, as for the others, 19 days, so other 4 days straight to the upside if we wanted to close the T plus 2 at 24 bars. Otherwise, we have definitely more time to proceed to the upper part of the chart. And the first target would be here at 4,064 CNY, and second target will be to 4,169, and the third one will be 4,268. If we want to gauge also the percentages, so the first impulse of this new T plus 4 has been 17%. But regarding the level we are at the moment, for the first target, we can gain 9%, 9.6% for to the first target. The second target would be at plus roughly 12.3%, and the third one would be up to 15%. So that's basically the situation. And we move now to the last one. The Seng Index has a setup that it's particularly its own one. It's not really comparable to the others. And now let's see why. So first of all, if we consider the downward cycles from this low occurred on the 28th of October, we have had a negative T plus 5 downward cycle that lasted 300 days. So from this second low on the 19th of January 2024, we started a new T plus 5, and this T plus 5 has been divided in the first T plus 3, second T plus 3, but here compared to the other indexes, the T plus 4 started on the 6th of August 2024. So we are not on the new T plus 4, but here we started this really nice uptrend with a T plus 2. And here we started this T plus 2 by touching the moving average 200 period. So here, this index has had more strength compared to the others because we were not in death cross, but we were basically in the last months floating on the moving average 200 period. Of course, we have had some spikes due to the volatility, but we started this climb as for the other indexes with a T+2, where the T+4 was already started. So this is the first difference. But according to what is important for traders for short-term and also in this case mid-term investors, is that the Friday's candles went over the top. Also, not the Fridays, but also a Thursday's candle went over the top at 19,706 CNY. And as for the other indexes, considering that from this top we have a T+5 upward cycle that is now turning into positive one, and we have reached 91 days, here we can stretch the rally until 2025, until base case scenario Q1 2025 up to the Q4 2025. So this is really nice insights as for the other videos that you can grasp by using our methodology here on this channel. What can we say about the Hang Seng is that here from this top on the 30th of August 2024, um, we have began a T+2 monthly upward cycle that um, now has reached a duration of 19 bars, so we can go straight up to 24 bars before eventually a retracement and then a return to the maximum tops. But we can also go until 44 bars before having such retracement. So by not the next weeks, but in 2 weeks, you have to be aware that a potential retracement can occur, either for a T or a T+1 or a T+2. We will have to check day by day. But of course, here, what is also important to see is that the target in this case for the Hang Seng will be at 22,566.78. So that will be a target that will push the price from the closing of Friday last week up to a gain of 10%, 10.14% more compared to the current um, price of this weekend. So that is all also for the Hang Seng Index. We have seen a little bit of a different setup, but at the end of the day, the forecast does not change compared also to the other Chinese indexes. So if you like our videos, please feel free to release some comments or put us a like as a continued support for our daily work. Thanks for watching and see you to the next episode.